Good afternoon and welcome to the Trinity Exploration and Production PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives in the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Jeremy Bridgeless, CEO. Good afternoon, sir.
Thank you, Alessandro. Good afternoon, everyone. Thank you for joining us for this latest investor presentation and update. The focus this afternoon will be on the Jacobin update, then a wider Paloseco view, and Julian, who is presenting with me, our CFO, will take you through where we are with Galeota currently. Thank you. So a summary to start with in terms of where we are. The immediate growth catalyst that we focus on is Jacobin, the 10,000-foot well that we would have drilled and completed by August of this year. We then moved on to the well testing, where we went into the Lower Cruise 3 zone. We encountered a sand plug there, and then now we've moved up to the Lower Cruise 1 zone, which I'll describe shortly. It's the first well in a hummingbird play, which looks at a deeper play within the Paloseco area, where we have 3 operating assets already, and it's adjacent to our recently, soon to be acquired Buenos Aires block, which again I'll explain further on later on in the presentation. Galeota, Julian will take you through what we are looking there in terms of a phased, lower risk, lower capital, better economic return strategy to move forward with the substantial reserves and resources within that block. Within the West Coast, to remind everyone that we brought the ABM 151 well onto production in April of this year, and the well continues to produce at above 100 barrels of oil per day, so it's very much performing in its in the higher rate that we anticipated prior to bringing it on to production. From a capital allocation standpoint, you will hear both myself and Julian speak to looking at projects that have shorter working capital cycles. That means shorter payback periods, cash and cash returns are strong, and that therefore competes for the organic cash flow that we generate through the existing production that we have. And earlier this year, in fact last month, we paid our first interim dividend, and the plan is to complete the payment of that dividend post the publishing of results for 2023, which will be in half one of 2024. I will just remind those, or for those who are new to us, just a quick touch on to who we are. Trinity is focused entirely on Trinidad and Tobago. The barrels that we produce, which are around 2,800 barrels per day right now, represents between 5 to 6 of the country's black oil production. We've got a strong balance sheet based on underlying operating cash flow, and that balance sheet at the end of September showed cash on balance sheet of 8.4 million, which included 2 million of drawn debt to match our VAT working capital receivable, and undrawn debt of $6 million working capital. The board and management team are experienced across a range of jurisdictions and across a number of different disciplines, so we have the capability to both look at and assess projects as well as deliver them, such as we have done with Jacobin. And the near-term catalysts that we have are within the Paloseco area within the next year, and then, as Julian will come on to describe, in 2025, looking at moving Galeota forward. So the hot topic at hand is Jacobin. So we have, as you may know, we drilled this exploration well. We discovered 3 oil-bearing zones. The deepest was the Lower Cruise 3. We brought that onto production with significant pressures and rates. However, the well sanded up. We then removed that sand blockage, brought the well back onto production, but that zone, the pressure quickly died off, and suggests that the zone itself that we encountered, whilst it looked quite promising, was perhaps quite small. We then moved uphole, and yesterday evening we perforated the Lower Cruise 1 zones, and those have we are now bringing those onto production and commencing the well testing. In terms of well testing, we're not in a position today to say what the results are yet, but we anticipate that within the next 1 to 2 weeks, whilst the well cleans up, we'll get a better idea of what the flow, the pressure rates are, and the size of the reservoir, and we'll come back and give you updates at those various milestones. We hope to be with you by mid-December to guide on what the Lower Cruise 1 zones, what the potential is there. So just putting Jacobin into context, the Jacobin well, is our first exploration well in a number of years. It's the first into the Palo Seco area, and it comes on the back of acquiring seismic in 2021, looking at that seismic, coming up with a range of opportunities, and then identifying the Jacobin prospect, turning it into a drill-ready prospect, drilling that well, bringing it onto production. We fiscalize oil from that, and that entire cycle has taken us 35 months to do so. In the graphic on the right-hand side, you can see the Jacobin well. The target sits within the WD56 block, but actually the surface location is in the PS4 block, which we acquired in late 2021. So that well, what it has done for us is that helped us to prove the geological model of hydrocarbon-bearing sands within the deeper horizons that are relatively undrilled. So that's been quite successful from that standpoint. And what it has done as well too is the outline area to the left-hand side of the Jacobin well represents Buenos Aires. And you can see in Buenos Aires, there is a geological map there. And right next to the WD56 field, or where the Jacobin well is, you can see we have 4 fault panels labeled A, B, C, and D. And these are within a few hundred meters away from blocks that actually have produced tens of millions of barrels. And this block, the Buenos Aires, is entirely undrilled. So it's all exploration. So drilling the Jacobin well has helped us to de-risk the other Hummingbird prospects, but it's also helped us to calibrate the geological model as it relates to Buenos Aires. Buenos Aires, where we are at this moment, we've been successful in our bid. We understand that from the Ministry of Energy that we may be getting the block awarded within the next couple of months. So we look forward to doing that. But in any case, we've commenced an environmental impact assessment, which allows us to capture the wet season data this year and then dry season data next year, which gives us the best opportunity of getting the environmental clearances to drill, which can set us up for drilling in late 2024, early 2025. I'll hand over to Julian, who will take you through Galeoto.
Yes, Galeoto is our largest single asset and represents approximately 70%, 69% of our group reserves and resources. It is a mature field, but with that, it gives us some opportunity to build around that existing infrastructure and look to infill and step out opportunities within the field and beyond the Trinitys field. It's probably worth reiterating a point that in the recent reading of the budget for next year, the Trinidad budget, the finance minister announced a benefit to shallow water offshore production, which is meaningful for us. It moves the SPT threshold, which augments our economics, particularly at lower prices, but it has a meaningful impact on our cash flow moving forward. We have been working on a refreshed concept for further development on Galeoto, moving beyond a single new platform with multiple wells before we see first oil. Touching on Jeremy's point around capital efficiency and getting to first oil faster, getting to payback faster. And what we're looking at is a phased development, and we've mentioned this in presentations in the recent past. But starting with drilling from some of our existing platforms, using our existing infrastructure to achieve production as quickly as possible. So we're focused on that schedule and returns. We have, as you know, had a study completed by Petrofac. That, for us, highlighted and confirmed a number of the development scenarios to exploit the wider Galeoto block, moving beyond the existing Trinitys field. And our plan is now to build out that detailed development engineering so that we have a field development plan certainly for their initial phase that links to subsequent phases so that we could take a final investment decision next year in 2024 that could provide for the drilling of wells in 2025. I'll show you a little schematic which hopefully puts some of that phase development in a little bit more context. So it's worth reiterating this is infrastructure led. This infrastructure is already in existence, which minimises the risk, the project risk and the capital risk. The initial development would target the use of our Delta platform as a drill centre, using our existing Trinity SK2 rig, which is a slant drilling rig, because the original wells drilled on Trintes, the reservoir is very shallow. They were drilled with a slant rig and slanted conductors, very similar to what happened on the Morecambe field in the RFC in the UK. Looking at the sort of cartoon that we've put together, on the lower right hand side, what's highlighted as phase 1. That shows a jackup next to the Delta platform acting as a tender assist. And that's to provide support for the drilling package, taking and essentially providing the services rather than putting it on the platform itself. The rig would be on the platform, but a lot of the services would be provided on a jackup or a lift boat. And our thinking is to try and create a solution here that would also be useful in subsequent development phases. That what we describe in phase 2, which is shown in the top right hand of this page, the Petrofac screening study highlighted a number of concepts, including what we've illustrated here, with probably the same jackup moved some way away from the existing Trintes platforms to access more remote reserves and resources, and probably with a small wellhead tower in place. Now that could possibly export crude to a shuttle tanker, but maybe also that there's a concept around a flow line to the existing platforms and using our existing pipeline to shore. So that very much is what our engineering teams are focused on maturing, so that we have something which we can then sanction, that's fully worked up, and take to a final investment decision ahead of committing to the project. When we last spoke to you just over a month ago, we committed to more frequent communication with shareholders. We think it's fair to say that we have delivered on that communication. We've had a number of releases around the progress on the LC3 reservoir, and I think we all on this call would wish that the news that we had from that reservoir was better. But when it became clear that we needed to move up hole, we communicated that to the market. We have firmed up today's date and for an investor meeting today also in London, and we're hosting that this afternoon, and we hope to see many of you there in a few hours' time. Moving forward, as Jeremy has alluded to, we will issue further updates on Jacobin specifically when the well has cleaned up and when we have a meaningful data on the stabilized flow rate. And that will take us through December, and then in sort of mid to late January we have our regular Q4 operational update release that we'll put out to the market. But be assured we will carry on talking to you. We'll carry on social media, and we will carry on releasing information to the market when we have it.
Thanks, Julian. So to wrap up what was a pretty brief presentation, really aimed at focusing on updating us where we are with Jacobin, but also explaining what is happening with Galeota, which is coming along in the background. So Palo Seco remains the near-term strategic option that we are developing and building. Jacobin has been very encouraging for us in helping to prove the geological model for the deeper play, de-risking the other hummingbird prospects within that area, and even more widely to the west, the Buenos Aires block that we are soon to be awarded. The operations in terms of the Jacobin well, once we are clear and we have some clear data to guide you as to what the potential of the Lower Cruise 1 zones are, we will be announcing that and letting you know. And we've progressed in the background with getting the environmental impact assessment completed for Buenos Aires. On Galeota, as Julian has described, it's taking the screening study results, turning that from what is concept into more of a detailed plan. It's continuing to work up the subsurface and quality to show the targets that we're going for. The supplemental petroleum tax regime change, that relief, we are looking forward to that being enacted on the 1st of January 2024. So we're looking forward to that. It will impact Galeota most materially for us, but also impact the West Coast assets in Brighton and the PGB assets that we have. And again, Galeota, as Julian has mentioned, is our single largest asset. So being able to convert those resources from reserves and resources into cash flow is very important for us. And the rates of production there are going to be quite significant from an offshore field versus the changes that we can get from a single Jacobin. In terms of the outlook, we are continuing to focus on keeping the decline rates as low as we can, staying as close to natural decline as is possible. So continuous focus on production management, looking at the cost structure, making sure that even with inflation, that the cost structure is optimized so that we can get the best operating cash flow from the existing assets, and then take that cash flow and then allocate it across the sustaining capex. But then also in terms of growth and returns to shareholders, we've paid our maiden dividend, interim dividend. The intent is to follow that up and complete that once we release the 2023 results in H1 of 2024. And once we can get the environmental clearance to drill, the intent is to try and drill towards the drill the first exploration well in Buenos Aires towards the back end of 2024 or very early in 2025. Whilst we do all that, it's looking across all of our assets, making sure that we're operating them in a fit-for-purpose way to make sure we're maximizing and getting the most out of these assets on behalf of shareholders. So I'd like to thank you for your time and listening to us today. As Julian mentioned, we are having an in-person meeting with shareholders where we'll go through this presentation and then take some further questions from you all. But let me hand back to Alessandro before we get to the Q&A session.
Perfect, Jeremy, Julian, thank you very much for your presentation. What I'll do is I'll just bring your cameras back up at this point. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few minutes to review those questions that have been submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you know, we received a number of questions pre this event, and we've received questions throughout today's presentation as well. And if I could just ask you just to read out those questions and give responses where it's appropriate to do so, I'll pick up from you both at the end.
Thanks, Alessandro. Shall I start going through some of these questions?
Yes, that'd be great.
Okay, great. The first question that we have pre-submitted actually relates to a couple of the questions that have been posted just this morning during the meeting. And it asks for guidance based on oil price next year. At this point in time, and as usual practice for Trinity to provide guidance in Q2 of the year in which we're currently producing. So, for example, in this year, we provided guidance on CapEx, operating cash flow, and production in Q2. The intent is to continue in that vein and provide the guidance in or around that time. As you'd appreciate, we are currently dealing with the Jacobin well, which has the ability to impact production. But outside of the Jacobin well, we are not contemplating drilling for the remainder of this year and not within H1 of next year. So you'd expect to see the base production during its natural decline. But then, what rate would Jacobin impact or what impact would Jacobin have? We are yet to see, and we'll guide the market accordingly on that. So no guidance as at this point in time. There's a related question from Colin L. It says, when will the next Hummingbird drill likely take place? B is late 2024, early 2025. Do you expect to drill before then? It's a good question, Colin. I think, understanding where we are with Jacobin, then moving forward with the environmental clearance for Buenos Aires. I think certainly a well in Palo Seco, whether it is a Hummingbird repeat, whether it's a follow-up to Jacobin or an exploration well in Buenos Aires, these are the discussions that we are having currently. So there's no firm plan as to which one but I expect that we will be drilling a well in the Palo Seco area in late 24, early 2025. There was a pre-submitted question which asks, to what extent is the 5-foot well parameter a restrictive element in long-term productivity of the deep well? Well, for this particular well, it means that we had to, abandon producing from that zone and then move uphole. But in terms of the deeper play concept, it contemplates at least 3 different sands in the Lower Cruise 1, the Lower Cruise 2, and Lower Cruise 3, all of which we encountered. The Lower Cruise 2 was wet though in this particular well, so that didn't, that was from an exploration standpoint, that didn't come in. But in terms of those 3 sands and whether they, will have hydrocarbon bearing, whether it'll be commercial, I think there's still opportunity out there. There are 8 other prospects that we have to look at. We are high grading those, and again, to the original question of where will we drill, it's looking across the Buenos Aires, those Hummingbird prospects and Jacobin to decide what is our next step in terms of accessing the deeper play within the Palo Seco existing producing fields. Julie, maybe I'll hand this one over to you. It's dividends are welcome, especially for long-term investors. I believe we allocated 1.5p for 2023. Is this right? And when would the ex-dividend and payments be?
Yeah, that is correct. I think we announced at we put that out in June. We confirmed that we were paying the first interim dividend in September. That was paid in October. The process for the final dividend is after we declare the full year results, annual report, that the board then sanctions a final dividend. So we anticipate that is paid after that, the announcement of our full year results, and that's would be in Q2 next year, and that would take us up to the 1.5 pence total for that year. And clearly that also sits within the broader commitment of capital allocation and at the board's discretion further shareholder payments.
Thanks, Julian. Another pre-submitted question is, in brutal honesty, how much confidence do you have in the upper, hopefully more prolific wells? Oil is only commercial oil when it is proven and out of the ground. Well, at this stage, there's a lot of hope that this zone will produce quite prolifically. Of course, it's way too early to give any sort of stay on that. At this point in time, the well has been brought onto production, so the wellbore is now in contact with the reservoir. Please allow us some time to capture that data, and we'll come back to you in due course once we have good data points that we can guide the market accordingly. Another question is, the ABM 151 was a success. What about ALM 22? The new tax regime obviously improves economics of these wells. So could we have details about your intention regarding ALM 22? Approximate cost, time scale, expected flow rate. A good question in that, it touches on the West Coast, and we've been very much focused on the onshore, specifically Palo Seco and then Galeota. The West Coast is not to say, there's no movement, but certainly it is not one of the near-term catalysts that we're focusing on. And Galeota certainly takes a lot of time and effort and intellectual capacity of the organization from a subsurface and from a surface planning perspective. So the West Coast, in particular ALM 22, which is a discovery that was made in the early 2000s by then Venture Production PLC, it still remains a discovery. What we are looking to do in terms of the West Coast is to acquire 3D seismic from the National Oil Company, which will also assist us in achieving one of the minimum work obligations for the Point Legoux license there. Work through that from a subsurface standpoint, identify within the block all areas of interest, and then make a decision as to whether ALM 22 is the best well to drill or not. In terms of ALM 22, it is a discovery. It's as close to infrastructure that Heritage currently uses. So there may be an opportunity for an export route that is close by and therefore quick to market. Again, those are elements of a project that allow us to look at converting an investment into first oil and therefore cash flow very quickly, and therefore speeds up the working capital cycle. So it is something of interest, but in terms of where we focus, companies currently focus on Palo Seco and then Galeosa. There's some pretty it's pretty long questions, but let me get to another one on past presentations, and maybe Julian, you can help me with this. Past presentations have claimed that profitable base production will decline, possibly to justify costly and highly speculative explanation to replace it. Has there been any geotechnical analysis to justify the claim of decline in base production? Based on current WTI prices, has there been a cash flow projection prepared for the business showing returns net of all new exploration?
Yeah, I mean, I think that broadly describes the work of all companies. I mean, that's what we do all the time. I mean, it is a physical fact that oil reservoirs decline. We deplete them, we take the oil out, the pressure declines, the rate declines. And you know, Trinity is working with mature fields, and you know, due to the hard work of both the guys in the office, the subsurface team and the petroleum engineers and the guys out in the field, we very effectively manage that decline through workovers and recompletions and keep that production going. But you know, it is a fact that over time reservoirs decline. We clearly, you know, we put out projects. Well, we work up projections for all of these scenarios. And as Jeremy alluded to earlier, you know, we will come back to the market as per normal and issue guidance in due course. That's what we'll be doing in the second quarter next year.
Thanks, Julian. One that was submitted today by Colin L. What is the concrete plan for Galeosa, taking into account Petrofac's analysis and Julian's explanation today? So, Julian, maybe I'll ask you through that one.
Yeah, I mean, I think, you know, we don't just magic up a project and go and try and execute it. That's you know, that would be a fool's errand and end up in overspend and misspend and a project not being delivered. So there is a lot of work, subsurface work, through to you know, the looking at assessing the ability of the structures to take a rig, because it's been a while since we've had a rig on the platform. You know, the work that's entailed with refurbishing the rig, building that all up into a plan. The plan for sourcing a lift boat or a jack up to come in alongside, how we would execute that. It takes time to work all of that through, to then go out and to, you know, to cost check that in the market, and then bring it forward to a field development plan that we believe is coherent and can be achieved. And then that goes through to final investment decision. That work has been in progress. It is in progress. It will continue into the first half of next year. And it's you know, it's going to be mid-year to, you know, into the third quarter where it be in a place where we could have that in an executable format. And if we can take that investment decision, then, you know, we're looking at drilling Galeosa in the second half of 2025. The first wells would go down. And similarly to the, you know, the information we've been providing about, you know, Jacobin, when we get oil out of the ground, it's straight on stream. With Galeosa, it will be the same. Yes, there's more preparation, more infrastructure to deal with, but as soon as that well is drilled, pretty much it's straight into the existing infrastructure and fiscalized. So we're not sort of having a big long delay until you've completed a new platform, and then you've got a huge capital outlay. It's about being phased, about minimizing the capital outlay before we get to first oil, and achieving that as quickly as we can.
Thanks, Julian. There's a question submitted today by Ross A. Are you now clear that any future Hummingbird wells, or at the very least any future Jacobin wells, need not and will not go any deeper than the LC1 level, potentially improving their economics? We're not, certainly at this stage. I mean, the deeper play that we're looking at, as I mentioned before, contemplates 3 different zones within the Lower Cruise 1, 2, and 3. We encountered sands in all 3 of these in this well. So that has helped to calibrate the geological model that we have. In this particular well, which has contact with a reservoir for a couple hundred feet around it, it's guided that the Lower Cruise 3 is not profitable, not commercial at this particular intersection. But there will be other intersections where the Lower Cruise 2, which is wet in this well, that may be oiled up, and the Lower Cruise 3. Each of the 8 remaining prospects have different focuses on them. We will use the information that we gather here to de-risk those, which is what we're doing right now, and then guide further. Will we be drilling another 10,000-foot well? We don't have a plan to do so right now, but it's not a case of that will not be the case going forward. But certainly, in drilling this well, we've learned a lot, both from a geological standpoint, from a drilling risk standpoint, and our view is that the range of uncertainty in terms of moving forward will be reduced, and therefore the exposure in terms of the well and the associated costs and time to deliver those wells, we will get better and better at doing those. Maybe I'll take one last question. This was a pre-submitted question, and it says, why do we not see any share purchases by executive members of the board of directors, which are Julian and I? Whilst purchases are not permitted during closed periods, there's been ample opportunity over recent months outside of closed periods. The lack of purchases is hardly a ringing endorsement by the board of directors in their own exploration strategy. I'll start, and Julian, you can give your own thoughts on that, certainly. I mean, in the last few months, actually, we have had not many, if any, open periods. Just so that you know, in compiling the interims, which we released at the end of September, there's a closed period for at least 30 days before the results are released. So for the majority of towards the back end of August coming into September, we were in a closed period. Prior to that, because we were drilling an exploration well, the results of which are deemed price sensitive for the entirety of drilling the well, and until we announced that we had completed drilling, we were in a closed period as well. So there was a small window of maybe a week and a half where we had an open period. And then post the results the interim results that were released at the end of September, because we were in the testing phase of Jacobin, we were in a closed period and remain up to now in a closed period until we release results of the testing of the Lower Cruise 1 to the market. So unfortunately, we are, by the rules that we are governed by, we are not able to, certainly within recent months, to have made any purchases. Of course, in the past, before that, the management and board, including myself, have made purchases of shares prior to this.
Perfect. Jeremy, Julian, thank you very much for that. I think you've addressed those questions you can from investors, and of course the company will review all the questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which is particularly important to you both, Jeremy, could I just ask you for a few closing comments?
Thank you, Alessandro. I think the focus for us right now operationally is seeing what we will get out of this Lower Cruise 1 zone. We're quite looking forward to being able to provide you with the results of those as quickly as we can. So please stay tuned for that. Other than that, the focus is on ensuring that we have good cash flow coming from our business and trying to make sure that we allocate that cash flow as best as we can for both growth and cash returns to shareholders. Thank you. Thanks for joining us today.
Perfect. Jeremy, Julian, thank you once again for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Trinity Exploration and Production PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.